Bob, I'll let Ron answer that question when he does the scorecard review in an hour or so. All right, let's start to find our seats. Okay, perfect. Orange, make that red. Minus 250. Minus 250. Green. Okay, good. That's funny, Eric. All right, we'll get the recording started. And we are off to the races. Eric writes in the comments section, I'm glad you're okay, Michael. I was afraid you'd flatlined a few times during the last experiment. record the screen. New snowball. No system audio. Record. When I first started doing presentations, I used a slide to make a point. And many of you bought the software watching me make the point I made with this slide. But it is the basis of everything I'm going to teach you here today, as it was the starting point of the thought process that has brought us through all of these classes, all of these indicators, all of these programs. When I first started to really get serious about studying GAN, he said something that kind of mystified me. And he said that he had studied the law of vibration, and that to him, there it is. This is a super sensitive mouse. Bring my own computer next year. After exhaustive researches and investigations of the known sciences, I have discovered that the law of vibration enabled me to accurately determine the exact points to which stocks or commodities should rise and fall within a given time. The working out of this law determines the cause and predicts the effect long before the street is aware. And it's that second paragraph that becomes the platform from which we build off everything here today. Determining the cause in predicting the effect. And my hope is, by the end of this class, the techniques that I'm showing you here, the sources of the data that are available, the indicators that we have access to, will provide you a better glove, a thinner, more sensitive glove when reaching in the box, because all of the techniques that I'm about to show you here have practical short-term, intermediate, and long-term applications using all of the indicators from 15-second charts through years of cycles. So when I started this exercise, oh, there it is. Wow, you need to calm down. I started to notice from this graph that a lot of the recessions and depressions occurred near solar maximums. So the sun has a bunch of these little black spots that you can look at through a telescope and count. And people have been counting them for centuries. And when you look at them really close, they're not little black spots at all. They're giant thermodynamic, churning, miles-high eruptions of radiation. It's sort of like a solar vomit. And it extends miles into the high, these coronal discharges, these arcs that just, if you put the planet Earth next to them, they dwarf our planet. And it seems that when the Earth is really active, when it's at its maximum activity, the system crashes. Think about what's happened with our webinar here over the last couple of days when the computer just goes boom. That's it. Can't do it anymore. I'm done. And total confession of honesty, I didn't really know what I was looking at for about 8 years. I just thought, yeah, that's cool. Markets are predictable, right? That's what we're selling, predictability. And one Saturday morning, I woke up about 5:30 Eastern, and I moved. I would say I ran, but you know that's a lie. I moved quicker than normal upstairs to my office, and I had a theory. And the theory was that if this was a causation, then it stemmed to reason that people were predictably violent to each other at these points in time. So I Wikipedia'd the hell out of any global conflict that I could date. And I was just interested in dates. When did these things start? And moving from left to right, I just want to build into this slowly. These lines are accurate to the month based on the date that I was able to find. The Chinese Civil War occurs at the top of this hump. Germany invades Poland at the top of the next hump. Then we have a cluster here at the top. The first one is Israel's War of Independence, followed by the beginning of the Korean War. Over here to the right, we have the beginnings of the Vietnamese War, which is fascinating because at the beginning of the next cycle high, the Tet Offensive of the Vietnam War, which was the bloodiest battle recorded in the history, from what I understand, occurred at the next cycle high. So it's climax, the most men dying in one battle occurring at that next solar high. Interesting enough, we learn about a young man named Muammar Gaddafi who decides that Libya needs a new direction, and he's going to wrest control and take over and make things wonderful. A pot with a chicken in every pot in Libya, the bloodiest battle at that point in the Mideast. And now, something very interesting about Russia. Every time Russia invades another country, and you'll see 3 instances of this, it always occurs at a solar maximum. Right? It's like a bus schedule. First time being Czechoslovakia. Next time we come down, we come up, the Earth and the Sun and the black spots, and the scientists are going, yeah, this is the most signs of activity we have seen starting to go down. The Iran-Iraq War, which eclipses the bloodshed and mortality rate of the Libyan Civil War at that point. And we're introduced to a wonderful young man, Saddam Hussein, begins to come into the picture. And when nobody's looking, the Soviet Union slides quietly into Afghanistan. Figures they're going to bring a new order to the Middle East. If you've watched any of the Sylvester Stallone movies, you know how that turned out. We have an interesting peek at the next one here coming into the early 1990s. Iraq gets a little bolder. It says, you know what? It wasn't just enough for here. Let's go and take some oil fields in this little country called Kuwait. We also have the conflict in Bosnia-Herzegovina, an incredibly genocidal, bloody, world-focused on it moment there. And down in Africa, not to be outdone, we have the Rwandan genocide with images of bodies floating down rivers from competing tribes. In essence, the world lost its freaking mind at the same time. Not to be on the sidelines, the United States decides to intervene, and we have a succession of Bushes. Not gonna do it. Operation Iraqi Freedom, and we are on our way into the fray. And when you pull back and stare at it in its entirety, it is a scorecard musically of genocidal periodicity. And I ascribe it to a commercial that I saw, more TV, I know, where the parents leave the younger son and daughter with their uncle, and they go on a first and well-deserved date, and the uncle puts them in this car that some company is trying to sell us because it's very family-friendly but sporty for the young, hip uncle too. And he takes them to the local park, and he feeds them ice cream, and he runs them up a hill, and he runs them back down a hill, and then he gives them some soda and candy from the other vendor, and he runs them up a hill, and he runs them down the hill. And then they go and get some pizza, and there's some high-energy soda on the table. He goes back to the park and runs them up the hill and runs them down the hill. The parents come home, the kids are fast asleep, and they say, wow, you're so good with kids. And then the Volkswagen logo flashes, and I started to wonder if culturally, if globally, if in a societal context, if we are not equipped with a burnout switch, if there's only so much excitation we can take before we crash. And so there are other instances of these types of studies that have been done, and they're very obscure because to admit that this is occurring is to immerse yourself again in an almost, there's a lot of nihilism here. Well, what's the point? Well, if I'm going to behave this way, it's not my fault. I'm a victim of my environment, right? And a lot of people, when I talk to them about this that aren't customers, they shoot away, they poo-poo it. It has an astrological feel to it. You're going to tell me next that I'm a Cancer and I should be mated to an Aries. But there are more studies done in this regard than you would think. At one point, Ron and I were looking to work with a company to help us develop an artificially intelligent of sorts algorithm to identify constellation patterns in dots. And we reached out to a company that specialized in that kind of neural network programming, and the lead engineer there worked for NASA at one point, and Ron told him some of the stuff we did. And without breaking stride, in the middle of the conversation said, oh yeah, we studied the effects of solar radiation on the markets when I was an engineer there. What? It's not something that NASA broadcasts on that C-SPAN channel, right? You see the guy floating in space and then they shoot to a economics study with solar radiation. So these things are being studied, and you can look and they're just under the surface, but in this case, you see the hooks that occur in the unemployment rate right around these times that occur. And there were some conclusions that could be drawn from that. Everything was right on schedule until the last solar maximum. And I want to draw your attention to the height of the values of the sunspots. And you'll see that they range here from 0 to 250 on the left-hand side of the chart. Well, what's been happening lately is troubling a lot of scientists, because the sun is getting progressively quieter. And I want you to think about that uncle that we were talking about. Can you see that picture there? And all of this is available. Sol 22 versus Sol 23 versus Sol 24. You'll notice it's almost like divergence on a MACD. It's getting quieter and quieter, and many more and more climatologists, including scientists in Europe, are predicting a small ice age based on this. And it's very controversial because it flies directly against the leading thoughts regarding man-made global warming. And yet we're seeing colder and colder winters and things to that effect. And this has been happening for centuries. But what really bothered me was that the last cycle, the last crash, as it were, occurred in 2008, 2007 into 2008. And you'll notice that the crash occurs exactly at the bottom of the cycle. It's not in the middle, it's not 1/3 to the right or to the left. You are here. And that is when the world melted down. And so many of the patterns that we've been studying involved inversions, the bane of every Flux customer to date. This idea that you can have a high with a green dot under it. Hello. And the market responds by doing this. And years later, we ascribe a red arrow here, and we call that a pattern 5. And then vice versa, we can come down to a point and have it go up with a red dot right here, and we can call it a panel 4. But we notice that the time cycles are generally in the centers of these reversals. And so when we come to the 2008 crash, a big crash, it's at the very bottom of the center of the trough. Well, this was a time where the markets were supposed to do the opposite, and instead they fell coming out into that. And I thought back about that commercial that I was telling you about earlier, and then I started to realize something. Because the solar cycles are getting smaller, there's less and less caffeine in the soda that Uncle Bobby gives the kids. And so they can run longer before they crash. They can stay up later. They can jump rope. That's a weird analogy. They can jump rope well into the evening. They can play video games when their parents are coming home. And they ride out that next excitation phase and crash here. Because Uncle Joey didn't keep the kids up long enough. There wasn't enough energy to think of it like a crash meter right here. And when they got up to here, this is the crash point, and it had only filled up to this stage. And it wasn't until going through the next cycle that they were able to reach that critical mass point. And it's bizarre to think of the world this way. I'm the first to admit it, but I want to show you some things in relation to history. And then we're going to go look at some charts using the tools and techniques that we've learned here together. You can go back and study where the various recessions took place. And so these are the 60s, the 70s, the 80s, the 90s, and the 20s. And I spent a lot of time before this class being very precise about when economists agreed when the recession took place, the GDP, the compression where we didn't make enough things and the economy had a measurable decline. I expect to see these lines where I see them now, as opposed to when I started this 10 years ago. I would be nervous if I didn't see them where they occur. And when the sunspots were above 100, above 150, the kids went to bed early, right on time. And so as we moved through the recessions, we had one in 1958, one in 1969, and then 1970. There was a stock market crash, 73 and 74. While we're on this chart, I want you to think about how we split the cycles into thirds yesterday. And in your mind's eye, I want you to draw another line here between 1970 and 1980 into 3-year segments, right? 10 years, 3 1/4 times 3. The crash occurs 1/3 in past the high. The recovery occurred 1/3 to the other side of the green part, just like on our charts on an ES 5-minute time frame. And then this one intrigued me because this was a big one, the .com crash. When you had, everybody had a website and their brother had a hot tip about this site or that spice, and MySpace is coming, and so on and so forth. And I had trouble finding any type of economic regression that wasn't at a peak. This is an example of that picture that we just drew where I broke that area into thirds with the splits or the fissures that we talked about yesterday, which is why it's so important to master that technique. It's if we're all learning Kung Fu, it's a basic block that everyone should know. And it'll help you split up time in a way where you can understand and interpret when things are occurring. And we're going to use that technique here in current market conditions in just a few minutes. Then things started to get weird. We had a recession in the early 2000s. The economists all agreed about that, and that was at a high. And you'll notice that this sunspot cycle was the third smallest one in regards to the two to the left. And then we have this crash right here at the bottom. All right. Come with me, and you'll see a world of pure imagination. I started to go back and look for signs of global conflict recently, because I'd done all my work back up to basically 2000, 2005. And that's when I was in 100% at this point, but I basically fell over myself looking at the different things that had occurred. For example, there were two waves of U.S. activity, Operation Iraqi Freedom, Operation Enduring Freedom, and they both occurred at a peak. Then we had this wonderful genocide in Darfur in Africa. Coming down here into the solar cycle low, we don't normally see violent global activity at a low. Think of it like a rest break or like the Super Bowl halftime. Everybody goes in the gym and relaxes for a while, right? Gets their legs and shoulders rubbed, a little Gatorade. All right, guys, let's get out there. It's going to be a great war. We got 6 years to get ready. Woo! Well, look at what starts to happen here at the bottom of this cycle. Boko Haram. Remember, free our girls, save our girls. Obama saved all these women through Twitter. Not really. We had the Tunisian revolution and then this wonderful Somalian civil war where it was particularly brutal. The African conflicts seem to be a good touchstone for when the kids are crashing. You eke just a little to the right and you have this wonderful band of people in Yemen who've decided that they're going to do what Saddam Hussein did. They're going to do what the Taliban did. They're going to do what Muammar Gaddafi did, right? And then just to the right of that, we have this wonderful period where people on TV got to hear the phrase Muslim Brotherhood was the buzzword of the day in the Egyptian Revolution and the Arab Spring. And it sounded like a bar of soap to me. The Arab Spring. And the man who got the Nobel Peace Prize brought the U.S. to Libya, F-16s, F-18s, Predator drones, and we bombed the crap out of a country with no declaration of a formal war because it was a UN coalition. I'm still trying to figure out when a war is a war anymore. And nobody saw the bombs drop, nobody saw the planes fly, but we were in the Middle East in a big way, a third time, but not at the peak. I want you to take in your mind's eye, I don't know if I can do it. This is my computer from home right now that we're watching, but I want you to take this bubble on the bottom and flip it upside down in your mind's eye, and it's upside down. It's weird, because it's the only upside down bubble for decades. Well, what were we supposed, and there's the stock crash right here. What were we supposed to see over here? What should the markets have done if we were consistent in any way, shape, or form with that? And what you'll notice is that in 2015, The little engine that could never turned around. It didn't, well, it paused, as you'll see in a moment. It never stopped, it never wavered, it never faltered. And those two kids ran up and down the hill and up and down the hill and over the hill into the neighbor's yard and through the Panera across the street, and it's still going. But right on time, we have the Egyptian insurgency, and when no one was looking, Putin snuck a few people over the border and said, hey, you have some pipelines over here that I'd like to get my hands on. We're going to say it's human rights violations, cover everyone's patches so no one knows who we are. But there's a couple missile launchers that weren't there anymore. But wow, there's a plane that was in the sky and it just fell in a million pieces and over 200 people's bodies were scattered in a field. And the world went, oh, that's interesting. What's going on over there? And that's the third country that either the former Soviet Union or the Russians invaded right at the top of a peak. Never at the middle, never to the left or the right, never at the bottom, always at the top. Why? Turkey has a problem with ISIS and ISIL, and they're now in the game, and they're moving towards fundamentalist radical Islam, and they're starting to shake things up. We have words of coups occurring and a potential military overthrow, and the military tries to take over the increasingly fundamentally Islamic government there. Now, I'm not saying, I'm just saying that in moments of solar climactic activity, there is a societal tendency to accept in a climactic state that killing each other is the way to figure it out. We are most inclined as a global society, in country, you can look at this nationally or globally, we are excited to the point of fearing that if we don't kill this thing now, it's never going to stop. People are most receptive to the idea of war at a climactic peak of solar activity. That is the only conclusion that I can come to here. I want you to think like a thug with me for a moment before we look at these really cool orange and red boxes in a second. Imagine for a second that you are Goldman Sachs and you are smarter than Michael, and you have access to people that focus on this nonstop. And you have this wonderful little train that goes like this. How might you manipulate an economy with your vast amounts of wealth that you can create just by calling your buddy who used to work for you over at the Fed and print tons and tons of money, and or calling your buddies in Congress to get things like the restrictions for mortgage applications lifted for a while, and call your guys over at Acorn and HUD and get things moving? Wouldn't it be fun just to kind of goose the economy right here and get people started and get them flourishing and get them buying houses? And we're going to see growth, we're going to see growth, we're going to see growth. And right around the 2/3 mark, you start to build a short position. You create an instrument, in fact, that allows institutions to short the mortgage derivatives that you created at the bottom. And then as you get near the top of the cycle, you start to spread rumors that maybe this mortgage debacle is a little unstable. And you move all of your positions now out of the AAA rated mortgages into these derivatives that you created just as the market is about to panic. But not before we move some of those stocks and some of the profits from that run into publicly traded defense companies. Companies that benefit from contracts overseas that build schools and generators and predator drones and concrete pads for landing strips in countries that don't have such things. Because as the war starts and the market falls apart and the economy goes to hell in a handbasket, we better pay for the war because we don't want ISIS on our doorsteps. They cut people's heads off, people. And we start taking on debt, meaning the banks are being paid by our grandchildren's salaries at that point, because we don't have the money. We lost it. Nobody has any savings. I don't have a job. Unemployment rates plummeting. And then you come into the next cycle, and guess what you do? You do the whole thing all over again. And when people are ready to believe it, you start a war. You point a finger at that guy over there and you say, he's going to kill us. Oh, we should kill him first. Just tell me when you're done. Well, we're going to need a lot of money because this guy is really brutal. In fact, these people are everywhere. There may be sleeper cells in this country. Who knows? They murder you in our schools. All right, whatever money you need, just take it. Do what we got to do. And so it opens the influence. Think about that 10% energy shift we talked about yesterday. I can use a little bit of money to get people moving in the right direction, and then they move the direction I need forward without my help. They have a momentum. People are easily excitable and just want the problem to go away. All right. Well, when you look at this chart, you'll notice that we're coming into another solar low. We have not had a market correction, not on par with the ones that we've seen. We didn't see one like the one in the 70s. We didn't see like the one in the dot-coms. We haven't seen the one like the 08. That little one that we saw is not a correction. It's a blip. And then I started to notice some similarities. If you look at where the crash was, right here, you'll notice what the sunspots did in relation to their number and in relation to the time or location of the epoch or the center of the reversal. For example, we had 8,200 spots between 05 and 06. Between 16 and 17, we had 8,200 spots in that same quadrant. In the next quadrant, between 06 and 07, we have above and below this little line here at 80. Half of the time we spend above, we come below, then half of the time we spend above and we come below. See it? Well, between 2017 and 2018, I see a strong resemblance between those two types of patterns. So again, I'm not looking at this while I rub my crystal in my left hand and I have my magnetic bracelet on the right hand and I'm feeling my chakras. I'm just looking at it saying there's a pattern here. Imagine this was a price pattern on a chart. With that level of emotionality and objectively just studying, this is what happened. If I place the yellow box where the crash occurred the last time, when the kids finally lost it and fell asleep, you'll notice that this box kind of files in right around into 2019, late 2018. Just saying, right? Everybody with me so far? This is fascinating with practical applications, right? These cycles aren't any different than the ones we saw in my brain on the 1 minute NQ chart with the 60-minute satellite signals. It's all the same interaction. Okay, here's where it gets fun. As though that weren't fun enough. Oh, by the way, I forgot this screenshot right here. This is back into the 1920s, 30s, and 40s. In case we didn't think that it was happening back then either. Without technology, without the internet, without the web, without phones, barely some electricity. Notice where World War I occurred. Say it a lot louder. At the bottom. Not in the middle, not to the left, not to the right. At the bottom. There was also a recession. 1913, 1914. At the bottom. The 1929 crash occurs right there at the top. The 37-38 recession followed by World War II is at the peak. Okay. There's sort of parenthetically, empirically, you can't I have friends who love to say the phrase, well, correlation versus causation, and I think they just say it because it makes them sound smarter. I can definitely see causation here as opposed to correlation, because there's too many things that overlap at this stage. So in a second, we're going to go looking at a pattern where a crash occurred. This is the current market conditions today on the right. And when I tell you where this pattern on the left occurred before one of the crashes that I showed you, I hope it'll blow your mind. It's kind of blowing mine right now. Okay, so we'll close this out. And we'll go from there. Oh, I wanted to show you this before I talked to you this about you last night, Carrie. This was an uninterrupted brainwave. And I decided to see if I could do like we did yesterday. Pam put green dot, red dot, green dot, red dot, like we did with the lunar phase. Take a look at that. What blew my mind away, literally, that's funny. You'll notice that there are some cycles, Pam, where the green dot is at the high. What do we call that? Pattern 5. And there were some brainwave cycles where the red dot was at the pattern low. What do we call that? This is my brain, sitting in a very comfortable chair with perfect humidity, and I couldn't see or hear Ron, just thinking happy thoughts. And when I split it into thirds, that shouldn't exist, right? In the context of everything that you know, and there's no practical application for this other than to point to it and say everything I'm about to show you has a foundation that is universal across all of these different measurements. All right. Here we are, February of 2018. Now, there's an indicator that we built called solar cycles. And the solar cycle tool tracks the solar maximum and solar minimum, meaning Ron and I spent the better part of a weekend reading every report from every scientist we could find to determine when the actual low and when the actual high occurred. And for some reason in NinjaTrader 8, anytime I reload the workspace, that indicator disappears. So let me just load it here real quick. And you'll see the exact date that the solar cycle high and low occurred in 2008 and 2014. No, wrong color. Do it again. Change that there. Maybe it's pink and green. There we go. And now we're going to use the same techniques that I taught you yesterday to identify where the reversals are expected to occur. So here's the first solar minimum. And one of the things that I want you to see, you'll notice when we draw an open price line from a dot that the market usually bounces off of it, right? And Ron uses those in the class and daily cycle markers and all those things. I want you to notice what happens across that green line. One of the ways to know if you've identified the right cycle is to see if its open price line actually causes price to bounce off of it. And so from the closing price of the exact day that we figured the minimum was, you can come back and see how the market attacked it once, twice, 3 times, 4 times, 5, 6, 7, 8, 9, 10, 11 times a lady, and took off from it. The next solar maximum, this is when the kid should have went to sleep. Okay. I'm going to clear this chart up a little bit. What usually happens at a red dot in an uptrend? We talked about it yesterday with the gear change. The market tends to fishbone pattern, right? So how do we know this was the exact solar high? Well, take a look at what happens to the market just to the right of the solar high. I'm going to pull this chart over here to the right. You see how it's kind of going into arrhythmia? The heartbeat of up, up, up sort of stops and it's sputtering. The open price line is right here as well. And I'm going to bring this up so you can see how the market reacts to the open price line of the solar maximum high. You could have placed a long off of that every time it came down to it. It should have went down here, and we had the lowest solar cycle count of the last 3. And so it continues, and it went straight through the roof, and it never stopped. Now, Pam, what we did yesterday, and Carrie, what we did yesterday with the lunar cycles, where we were able to project forward into the future, we're not at the minimum yet, so we don't have a new data point to draw to. And so what I did was create a 150% extension and a 200% extension off of the spacing between the last 2 cycles. Just like we did with the lunar cycles yesterday, identical, no difference. Now, to show you where those lines are, I'm going to make them thicker than the other ones. We'll make it 8 at the 150 and 8 at the 200. Because if anything, we've determined that this technique is reliable in helping us understand where those turns should occur. So this is the 150% extension, this green line, we're going to come back to it. And then over here is the 200. Okay, so far so good. Well, when we put a green dot there, just like we did yesterday with the lunar phases, I want you to notice what occurs. I've got a green dot just underneath it. I'm going to draw a support level here. I don't know if you can see it because I made the line too big, but that's a pattern 5, and it's at the middle of the peak. Right there, right? And when we see a pattern 5 on a 5-minute, 1-minute, 3-minute, 60-minute chart, it usually does what before it goes back up, Bob? Pattern 5 pulls back before it goes, right? What are the odds of seeing that on a 150% extension of the solar minimum maximum cycle on a daily ES chart? And in your book, Guide to the Histograms, I tell you that if we want to go long, we have a pattern 5 continuation where it breaks the high by 2 ticks. And so we see that pullback. If you watch the caveman video, you'll notice that I tell you to trade, wait until it pulls back to the dot before you go long. Okay, well, that was pretty interesting on the 150. And then as we started to break those cycles up into thirds, things got a little weird. For example, you see where I highlighted that red dot? It's the second of the thirds between the solar maximum and the 150 extension. So we split that first group of time into thirds. And I want you to see what happens, because it's important towards diagnosing what's going to happen next. The first third, Pam, the 33%, is this line that we're drilling in on right here. That bar where my cursor is. And look at the reaction off of it. It's the third time that the market comes down to that level, doesn't break the low, doesn't stop, continues higher. If the first line is green, the next line is red, Look at what happens when we get to the red line. How many times did they try to go up before they came down? 3 times. 1 high, 2 highs, down it falls. Look how close it comes to the open price line of the solar maximum. When it doesn't touch the line, it generally means the trend will continue and it will go higher. It means there's too much energy. And they don't touch the line, but they come within a few dollars of it. Coincidentally, if you come back here and you split those levels into thirds again, using the tools that we've established that work, you're going to notice some really weird stuff. Pam, if the first line was green, the next line is going to be red. I know that was your answer. Tim, look what happens at the split of the split. It's the exact high. It's not 1 bar to the left, it's not 1 bar to the right, it's not 10 bars to the left or the right, it's the exact high. Okay? If that line is green, what's the next line going to be? Everyone says, if it was red, the next one's going to be green. Check out this. You see that bar? It takes off like a shot out of there. And so we can use these techniques over and over again, and we can split these levels again and again and again, infinitely, like a piece of paper that self-perforating over and over again. Well, as we start to get into the present, I did what we did yesterday before we got here. And I started looking to see, where are these peaks and valleys? Where are the smaller cycles? So I split the split, and then I split the split again, and then I split the split again. Say that 5 times fast. I split the split, I split the split, I split the split again. And here's where I really started to freak out, because at all the red signals, that's a pattern 4. And yesterday, Ron did a class on scorecard, and he showed the ability to look for patterns in the direction of the trend, and pattern 4 scored higher than all the other ones. And here's another pattern 4. In fact, look, it's the exact low of that pullback. The banks were driving price down into a retracement to get the next leg up. When you see pattern 4s and 5s, I believe it's a push. It's a manipulation. It's an unnatural cycle. And so with the exception of one of these red lines, the other 2 cycles were gasoline on a fire. My dad, to freak out when he moved upstate into the Appalachian Mountains, Catskill Mountains, people used to stop and look at their house. They had a picturesque farmhouse, and he wanted privacy. He bought a big container of black powder at a flea market, and he would dump solo cups of black powder on a fire at night, and he would scare people. He said, I think they think I'm worshiping Satan. He was a weirdo. But that's what these markets are. They were inflaming at these points. And as we continue forward into today, you'll see that the red dots really haven't done much of anything. They've kind of slowed the market down for 3 or 4 bars, and there's been consolidation. But the green dots have been the ones that have been pushing higher and higher. Except something went really wrong in the matrix over here. This last little one, we're starting to see those first signs of, all right, stay with me. In this chart, there is another line. Remember we have that big fat green one? Where's the 200% extension? It's over here. We haven't come into that one yet, but it's there. It's a big, if there is a sell-off coming, it would be at one of the red lines, either the small ones or the intermediate cycles or the larger cycles, right? And so that's sort of sitting off to the right here, waiting for us. Now, Come with me, and you'll see a world of pure imagination. I told you there was a time in the past where something weird happened. I'd like to bring you back to 2006 and 2007. And feel free to correct me if you think I'm wrong in any of these assumptions or patterns. In all honesty, I've stared at them way too long. The chart on the right is today. The chart on the left is February of 2007. 2007. First, I want to draw your attention to this pattern on the bottom. One of the things you'll notice are the months down below. JUL, AUG, SEP. Left chart. JUL, AUG, SEP. We have what Carrie described as a whipsaw to me yesterday. And I'm going to, if you'll indulge me, draw some things here. A to B from the low. B to C, which is a higher low, doesn't complete. Then it comes up. You have a little whippy leg down. That's sort of a D. And then it breaks out, pulls back to the highs, and goes. All right? Let's go over to the right. A to B, B to C. You have the little whippy one right here, right? It breaks out, pulls back to the high, and then it goes. Well, that's odd. There's a financial deja vu occurring here. Well, it gets worse. Well, not worse, any better. If you know about it, it's better. If you don't know about it, it's probably going to be worse. We have a big high. Big high. And over here, we have a big high before a huge correction. Look at the big three-lettered word down on the bottom, Feb. Look at the big word over here on the bottom, Feb. Febmar. History often repeats, but sometimes it rhymes. Oh. That kind of looks familiar here coming into April. In fact, if it was a patient we were measuring the heartbeat of, we would say that the heartbeat on the right and the heartbeat on the left are pretty much identical. You see a lot of faces, a lot of Okay, so if we use the same terminology and we use the same letters, we call this the high. Pretend this is a Friday morning session like we used to do. Come on now, caps lock, A. And we'll make this super big. Arial 12-point Ninja 8. It's so much easier to change these things. Over 500 user-driven enhancements and improvements. 25. Template. Save. Default. Only 6 clicks to do what used to take 1. 7, sorry. Okay, so there's A. Then we have the first load, B. Then we have the second stab, C, and then the pullback up to here, D. Escape to cancel. D. Well, over here, you already made the connection if you've been following along. You have A, B, C, D. Excuse me. How am I doing? So far, so good? They kind of look the same, don't they? Okay. Like, I have people that are like my wife that call me out on stuff when I'm way out in left field. And they'll say, like yesterday when I had the ES up instead of the 6Y, you're off in left field. Calm down. It's not what you think. And over here we can go to E. So I want you to think about this in relation to the cycle that we were talking about a moment ago. This one over here, forgive me. This is the yellow box that we're driving down into right now. This is the last time we were in the yellow box. This is the last time we had a big crash at the bottom of a yellow box. So I didn't go to school for this. I don't have an MBA. I don't have some fancy website with 5 million Twitter followers. But as you come into here, the similarities are haunting. And the energy cycles are what they are. Okay. So that's sort of current right here. And now I'm going to pull the box away. And what was troubling to me, you get this. I'm going to take the box completely away. Drawing tools. No, I can't. In NinjaTrader 8, it's not easy to take a drawing object away because you have to get a home mortgage before you do it. Where's the top of the box? I'm sorry. The chart on the right goes up. E continues higher through D and continues higher. The right-hand side, we should be up over here by now, and we're not. It should have continued this way. This little dip right here is the same as this little dip right here. See it? And that's where the pattern breaks. As of right here, it should have continued higher. But as of right here, it's dropping down lower. Now, ways to use charts when you've dialed into this. And I'll send out the workspace for this for Ninja 8 when we finish here and get the recordings out to everybody. We did this yesterday on the gold chart where I didn't use any cycles. I just started drawing lines, right? You can pick where the pivots are. And you'll notice that the retracements, PAM, are sort of the same distance away from each other, right? Or where the major reversals are and where the highs and the lows are. And you can start to break up where those pauses are. And so over here, where we should have been going up, the market went up on these bars. You know what? I think I have a way to cheat this. Yep. Okay. So in this cycle in 2007, we climbed up higher until this line. So we can make the equivalent assumption over here where that peak was. That was the highest part of the move. That's line number 1. And then we had 1, 2, 3, 4, 5, 6, 7, 8, 9 days before the high. So Carrie, sometimes cycles invert, right? They go the opposite direction of what they would normally do. So we can go 1, 2, 3, 4, 5, 6, 7, 8, 9. We are here right now. Let's call it A1, not the steak sauce. A1 over here is a low. So if A1 is a red dot in our original cycle, what happens at a red dot when it's at a lower low? We gave it a number and everything. It's pattern 4. You guys are awesome. You ladies are awesome too. The next high, according to this, is 1, 2, 3, 4, 5, 6, 7, 8, 9 or 10 days from that. So we can come over here. Ready? Control 1. I should be able to copy paste each of these lines forward. So Carrie, remember last night you were saying I should be able to know where it's going and by when and how the market's going to move? Yeah, been there, done that. It just takes too much time. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That would be the next cycle here, which may be a green dot. Yeah, take a look at that. I'm learning something with you. Green, red, green. So I'll copy this. Green, red, green. That's kind of pretty, actually. It's in the brainwaves. So that would be E. Where would the green be here? So this next one is going to be green. Over here, green, red. Where would that E be? Excuse me 1 second. B, C, D, E. B, C, D, E. Oh, this was a pattern 5. Duh. I got lost. Back-to-back inversions, right? We talked about those. Carrie, you called, what did you call it? The shuck and jive?
Shuck and jive. Well, they're 2 stop runs and then go the original direction.
So yesterday, Carrie showed me a pattern. This is kind of funny how this all came together just now. Serendipity. He showed me a pattern in the market we were looking at on the ES where they went like this and they went like that, and then the next signal was a red dot and it went down. This was a green, and they were back-to-back signals that were stop runs, and then the next one worked. And that's exactly what they just did. They took out the high here, they took out the low here, and now the next cycle is a green dot, which would bring us into phase with that green dot. The point I'm trying to make is that if you look at what happens here, May, June, July, August, September, and when October comes, the leaves begin to fall. That's the end of the party. October into November of 2007 was the completion of the cycle and the bottom of the box in 2008. October into November of this year, I think may be optimistic based on the fact that these green dots are starting to fail and go deeper. Think of it like an engine. My truck at home right now, I got to take it to the mechanic because when I was riding at one point it lost power. Oh, where'd the power go? We shouldn't have pulled down this low this early if the baby was full of caffeine at this stage. If you read the articles and you read between the lines, almost every major institution has said they're expecting a correction at the end of 2018 into 2019. Well, this is the only way that I know to show that I believe them for the first time. And if we draw this line at the high, it lines up exactly with every other analysis that we've been able to accomplish in terms of solar cycles. Right there. So let's take a look at this and see if we can make any comparisons. How far out are we from that? So let's take a box from here to here. Let's see if we can get some geometry from here to there. Well, we're not at the E yet, right? So there's the E. I'm trying to find a better way to do that. Let's go A to E. And now I'm going to copy and paste. 1, 2, 3, 4. Looks like it's going to be 5. 5 boxes. And then we can do the same thing over here. A to E. And you'll see that all these things that we've been doing yesterday and today, they work. And you can do the same thing, 1, 2, 3, 4, 5, over to the right. And now we sort of have a brochure about the next couple months in terms of where to expect large moves in the ES. Because you can actually measure now the number of days on the left between cycle and cycle and establish that railroad track pattern we were talking about. 1, 2, how many rectangles are there? 1, 2, 3, 4, one more. 5. Somewhere over there. And so we're sort of seeing, let's pull these up above the rectangle. There we go. Click there. Sorry. There we go. When everybody thought it was the end over here, there are some important things to look at, right? Shuck and jive. They came down and took out B. And when that happens the next time, imagine the headlines. Imagine the phone calls. Be the mobster in your mind for a second and kind of giggle to yourself, because there's always one knife left to thrust into the corpse, right? So that's over here somewhere, right? In fact, you could count the number of days that it took to go from this low and this low to over here and have a window. Now think of it in terms of options.
If we're at an all-time high when we get to that number of days in the future, sell a put or buy a put, forgive me. If we're at the low over there, it's call time. Take a shot, because no one's buying calls here, right? Same thing up over here. If we're at an all-time low over here at this high, that number of days into the cycle, that distance, look for a put. Same thing if it's at an all-time low at that point. These termination points now are telling us these are moments in time where the thugs have something planned for all of these people. When I put these little blue noobs, these little blue nodules on here, can you see what I mean by that? These are red and green dots that haven't been hit yet on the right-hand side. And so when you take this workspace home and you start to look at it, I want to see if you come to the same conclusions that I came to. Carl says, was any of this due to quantitative easement? Now, this is always nature versus nurture, these questions. Who controls the quantitative easement? The Fed. Who is the Fed? It's a private organization, non-elected, comprised of who? The bankers. Or what we called yesterday morning the mobsters, the thugs, right? Now, is it ethical to do this? Is it moral to do this? Is it legal to do this? These are questions for people who don't want to be profitable. If you want to dial into those cycles, though, you kind of have, imagine on the Super Bowl, the Seattle Seahawks defensive coach comes over and he says, you know what, I hate these guys. I never got a car, I just want a jacket with my name on it. Here, I'm like, what's this? It's the playbook. For what? Tonight's game. Would you open it and read it? Or would you go in the locker room and say, I could know what these guys are going to do, but I think we're better than that? You would open it and read it. Every damn one of you would open it and read it. And I would too. And the ones who say they wouldn't the most, you'd be the first one to read it. And so in many ways, this represents a playbook. And most importantly, everyone, this is a playbook. When you understand the vulnerability of a global society to innuendos and rumors and things of those nature, you don't have to look very far to see where the signs are. So we just passed a budget. Does anyone know how much the budget cost? It was $1.2 or $3 trillion. This morning when I opened up my browser, CNN Money, the U.S. needs to borrow almost $300 billion this week. Guess who buys all that debt? Asia. Guess who we just started a trade war with? Asia. Okay, this is what else I read. Look at the bottom word in the headlines. Did you know China has hypersonic nuclear missiles now? We don't have hypersonic nuclear missiles. All of the money that we just spent on this $1 trillion budget went into defense spending. What is it? How many? Yeah, this was just today. White House budget increased to defense spending and cuts to safety net, but federal deficit would remain. Billions and billions of dollars into the military. Okay? I see all of these things in this context. Nothing is random. People are in place because of money that was transferred, money changed hands. I see figureheads, talking heads, puppets who are told to say what they're supposed to say. My boss originally said, if you want to know who's in control, follow the money. And right now, all of the money is leaving the economy, which is already starting to, and where is it going? To the military. Where are the hot spots now all over the world, right? All-time crisis, all-time Cold War, 60 Russian diplomats were escorted out of the country last week. Trump got rid of them. All over Europe, all of the Russian diplomats were escorted out. Why is this happening right now? And not 5 years ago, not 3 years ago, not 2 years ago. We're coming into the yellow box, and we're seeing the signs on the chart. So if you're an ES trader, or if you're an options trader, or even if you're a dollar anything pair trader, these dates on these charts on the left are the notes of a song that we've heard before. If you listen to, there's a song from the 80s or the 90s, a band called Third Eye Blind, Semi-Charmed Life. Somebody figured out that if you play the Third Eye Blind song on top of the Taylor Swift song 22, it's the exact song, the exact notes with different words. So when they go, do, 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 she's singing, you, me, da-ma-na-da, da-ma-na-da, and they mash the two songs together and they're identical. These are songs that have different words, but the notes and the cadence and the rhythm is the same. So this is a roadmap now into the fall of next year, into the new year. If you want to follow it, pay attention to these points, to these reversal dates. Understand that a dot that was red in the past is red in the future, but if it's at a low, it's a pattern 4. A dot that was green in the past, any of these highs, can be an all-time high in the future and reverse and go down. The cycles can invert, and it's okay when they invert. History repeats, but it sometimes rhymes. But those dates, those times, those vertical lines like we drew with the lunar cycles, like we drew on the gold chart, and now that we're drawing on this chart, they are the rhythm, the pulse of that energy that started with a solar maximum back in 2014. Okay. There's got to be questions. You're all staring at me weird. How do you feel about all this? Excited? It feels like you know something you shouldn't know, right? So even if the crash doesn't come, here's the thing. If we're at this red line and we're at a brand new low, you know what to do with that. Come on, cursor. If we're down over here somewhere, when we should have been up over here, even if it's wrong, we still know what to do with it. You still know that that date is important, and we have those lines in the architecture to work in front of it. But I can't see how that doesn't happen. We went completely through this high, and it never corrected once. There's trillions of dollars that have no backing whatsoever that we can't pay. And Ron said there was a magical number in the debt where once we reached it, we couldn't pay the interest anymore.
We just eclipsed it.
And he said we just eclipsed it. I have a house built across the street from me, a mile away. It's a $900,000 spec house. There's no buyer for it. You're shaking your head. Any of you in real estate, you've seen this before, right? So Gig says it's the ultimate conspiracy theory. I'll put these, when I put the resource page together for everything, I'm going to upload all these pictures and diagrams and documents and workspaces. Don't go selling all your stocks. It's just me. This is educational purposes only, but look at it for yourself. See if you don't see the same things that I see. And if you are invested, or if you're looking at ways to take advantage of that drop through alternative instruments, it may present an opportunity that you want to explore, is all I'm saying.
I want to go back to Carl's question. He
Yeah,
asked about quantitative easing.
yes.
And I can't remember exactly when it was, whether it's 2008 or 9. But if you go to the St. Louis Federal Reserve website, and I forget which measure of money supply it is, money supply for decades is going up at a nice smooth curve. Now it takes off like a rocket, and it doesn't double, but I think it tripled in a very short period of time. The Fed was printing money, putting it into the economy because the Fed was worried about deflation. And now they still have, for everybody's knowledge, anyway, they still have those assets, and at some point they're going to need to get rid of them. And that's part of what, to answer Carl's question, that's part of what's on the horizon as well. Is at some point the Fed's going to need to sell those assets that they bought to provide the quantitative easing to allay everybody's fears. And
As it was explained to me, there's so much money in circulation now that if the Fed raises interest rates with the loans that we've taken out and the debt where it is, to combat inflation, they would have to raise the interest rates. But to raise the interest rates would mean we can't pay the interest on the loan.
yeah,
And
we couldn't borrow money.
We can't borrow any more money to do any more, and so everybody kind of knows it's the new Bear Stearns, that they've eased themselves into a corner where in the past they could raise interest rates to cool things off and stabilize it, but if they raise the interest rates now, they can't pay the interest on the principal, and the whole thing explodes.
Yeah, everybody.
It's the ultimate Ponzi scheme.
Yeah, everybody get ready to fuck it up because it could hit the fan. And there's a book that's been written, Robert and David Wiedemann, two brothers, and I forget the woman who was the third author of the book, wrote a book called Aftershock. And what they said was basically what happened in 2008 and 9, 7, 8, and 9 was just a prelude.
Well, if you go back to the chart and you fast forward and you change this to a monthly, look at where we were in 2007, and look at where we are now. And if you measure at least that move, well, here, and you put it there, half of that move would take us to 2,400. It would be a 400 ES point, and what is that, a 4,000 point Dow drop? Double that would be 8 to 10,000. And you can sort of see structurally what's begging to be hit.
Back down into support.
Right there, which is the measured move off of the last retracement. The writing's on the wall. It's just a question. It's kind of exciting to see if they're going to do it. Gig said, really nice 5-wave Elliott pattern also. I'm not trained to see that, Gig, but if you see it, I believe it. 1, 2, 3, 4, 5. Okay, I see it.
Larry's got 1, 2, 3, 4, 5.
Let me draw it for you. This is the start of the one. Is that a leg?
You're too far. Right there. The 1, 2, and 3, 4. And then the tricky part's about 5 is just when you think they're done, they take you out.
Well,
That's what you're saying. 1 high left.
that's kind of what we said, right? So Gig, Larry said the tricky part with a 5 is there's usually one high left and you're not sure what it is. Target of the end of a 5-wave move is back to the wave 4 in November of 2016. Yep, so he's saying that would be the target, which is the same distance of that move. But they need to provide a backstory. They need to provide an enemy. They need to provide another Boko Haram or another Saddam Hussein or another Osama bin Laden. There's always somebody to be afraid of. And we are primed right now as a world, as a society, to be susceptible to whichever influence is the shadiest and the scariest, right? Yeah, so let's stop here and see some sunshine and not feel so depressed and panicked and angst-ridden. But it poses tremendous opportunities, I think. We have the pattern locked in. We know what's going on. You have an awareness now. We also know if the next cycle high is in this fall and winter, then from investment standpoints, from real estate standpoints, if you're looking to buy a vacation house like we are, crashes are wonderful. Because that house is on, it's a fire sale at the beach, right? And so think like a thug. That's the theme. I should have made a shirt. We'll put it on the mugs. We'll paint them before we go. Think like a thug. Think like a gangster. Immerse yourself in this conspiracy and see if it doesn't start to pay off for you on big and small time frames. Let's take a break. When we come back, Ron's going to come back and look at the review session for the cycles that we studied yesterday, do some work on the Forex pairs for our gentleman in the back, and then we'll break and have another wonderful lunch. Guys at home, I'll see you at the next webinar link. We're going to close it out here. Thanks, Bob. Appreciate you guys. How was that, everybody? At home, okay? Good webinar, bad webinar? Okay, good. Thank you, Nick. Understandable, comprehensible, crazy in a good way. Appreciate that, everyone. All right, we'll see you here in a little bit. We'll do the webinar here next for the review session. We'll see everybody there. If you don't have the link for that, let me get it for you. Stand by. The Vegas scorecard optimized. We'll put that link in there just in case you don't have it. Enter. Okay, there it is. And I'm going to close this one out. Go ahead and click on that one real quick, and we'll see you guys soon.